Hi everyone, hope you're all doing well. Today I'm going to talk about Boohoo. I asked you guys on the video yesterday, do you want to see a Boohoo video? And the demand was there. So here we go. We're going to talk about Boohoo and an update on it after they reported their financial results for last year. And a little bit of a guidance outlook update as well. So we'll go through everything today. Now, there's two things I'm going to say is that I have not listened to the webcast or the conference call from the actual financial update yet. The reason why is because I was working when they were doing it live, and since I've gone back onto Boohoo and their investor relations, they haven't put the repeat up yet, which is a bit annoying to say we're now 24 hours after it and they haven't done it. So hopefully Boohoo could speed that up a little bit slow from them. And also I thought there wasn't that too much new information out there than what we kind of already knew. So I was a bit like, what update can I do, because there's not too much information. So there will be a lot of recap on stuff that I already have said on this channel, but yeah, you wanted a video, so we'll go through it. So yeah, overall I thought the earnings were probably a 4 out of 10. They were just okay, really. I would say maybe just a little bit under okay. They were just, meh. It's kind of what we knew, really. There wasn't too much surprise in them earnings. Looking at the share price point of view, the share price dropped 10% on the day. Which I thought was fair enough. There wasn't anything to get investors excited, and we're very much in a bear market. And with a stock like Boohoo that is also quite shorted as well, you'll notice that massively. I noticed it yesterday as well when they brought these results out. There was a lot of negativity, a lot of incorrect statements that was being put out there as well. And I was like, it's Boohoo. We're known for a long time. If you've been a Boohoo shareholder for longer than probably a couple of months, you'll notice there's always a lot of negativity out there. There's a lot of short sellers out there. The Guardian, shout out to them because they've been a little bit quiet for the last few months, but we know how negative they are in the media about Boohoo. Yeah, it's a stock that's viewed negatively, as we know, and we've seen it in the share price. The share price has been absolutely demolished, and when you look at the share price now, when you look at the financials that Boohoo brought out and the guidance they give, the guidance was probably the weakest part of the earnings update. And when you looked at the earnings that came out and the guidance that was there, it was incredibly clear to me that when you look at Boohoo now, what is priced into Boohoo is it's going to stay at these numbers forever. It's going to stay down at this lower revenue growth forever. It's going to stay down at these lower profits forever. Basically, Boohoo is now priced in as a low growth company with very, very low margins. This is all priced into Boohoo for the longer term now, and that's what we're in. And when we're in a negative market like how we are, when you bring out earnings that are just you're not going to get any rewards for it. To have any sort of increase in share price on the day, you're going to have to bring out some pretty good earnings, and Boohoo's were just not okay, I guess, really. So that's why probably the share price didn't perform, is obviously because of the negativity that's in there, and Boohoo just kind of brought out meh results, really. So yeah, I think that's probably what I'd say to the share price reaction. Now, getting on to some of the positives that were in there. First of all, warehouse expansion. So the warehouse expansion is starting to happen now. It's going to expand to potential 4 million revenue, which would be really good. So that's probably about a 2x from where we're at right now. So if we can get to 4 million revenue in the next 5 years, that would be absolutely amazing. That would suggest what we do expect from Boohoo is that they will go back to 20% plus revenue growth. So they're kind of putting the infrastructure in place for that, which is good. They are working on that automation warehouse in Sheffield, which should open in the coming few months. They're also working on the distribution center for the USA, which is obviously really key because US is probably where we're going to get a lot of the growth from in the few years. So we do really need to make sure we keep improving that part of the business. UK growth was still very strong for a part of the company that makes up major parts of your growth. The worry that Shein's coming into UK and taking market share was kind of all dismissed in the financials. The UK growth was still really strong at 27%, which is great. A lot better than what I thought it would be, actually. So yeah, the UK side of it was pretty good. The US wasn't too bad. The US still grew at 4%, considering the amount of problems with shipping out there, the freight problems, the air travel or the air shipping problems that's out there, air freight problems. To still grow at 4%, I thought was pretty good growth as well, and that's where we want to see. We probably want a US growth to get back to 20+% in the future, but I thought the numbers weren't too bad. Rest of the world and Europe was a little bit weaker, which is probably the parts of the business for them to really start improving on. But same again, the part where we didn't have the kind of shipping problems at the moment was still pretty strong, which was good. So obviously the other parts of the world were where we saw the little bit of weakness again, and that kind of falls in line with what we've been saying for a while, which is shipping is really causing a massive problem for Boohoo at the moment and being able to ship them products out. And that's why it's really important for them to kind of keep improving the infrastructure of the business to stop these issues from happening, and hopefully these issues do resolve themselves in the coming few months, and that will obviously help Boohoo massively. Some little points to make out here is that EBITDA is still holding around 125 million, which was pretty good. I think that was what they did in 2020, which is still pretty impressive considering some of the issues that we have at the moment with the rising cost of shipping. They did say there was 60 million headwinds, which obviously returns to the shipping and the returns of the product. So we know shipping has increased massively. We've heard it from a million companies. Shipping has increased massively, and is that going to flatline? Is that going to come down? Or do Boohoo raise prices where that kind of controls the shipping side of it? We'll see what happens there, but that is still currently going on, which is one thing that we need to see resolved for Boohoo to go back to doing some good amounts of profit. Unfortunately, it is out of their hands to control that, but we've seen that with many businesses out there. And also the return rates. We know that return rates have sky high, and when you have high shipping costs and you also have high return rates, higher than normal return rates, that's obviously going to impact your margins as well. And the reason why return rates are so high is because what we had in 2020 is people went for more comfy wear. People weren't going out. Comfy wear is normally, comfy, it's stretchy, you don't really need it to perfectly fit your size, I would say as well, whereas people going out and leisure wear has dropped massively, and going out is coming back. You have a lot of people that are ordering many different clothes to try on before they go out. They want the sizing to be absolutely perfect. Compared to a lot of the leisure clothing, it's not as stretchy, so it can accommodate a little bit of the sizing being wrong. With going out, a lot of going out, whatever you're wearing going out, that's obviously doesn't have that. So return rates are obviously a little bit of an issue at the moment until they normalise, and also leisure wear as well comes back to make up probably a lot more of the sales. So you've got obviously the shipping issues, you've got the return issue that's going on. So this is something that, like I've said previously, in my opinion, this is something that will be resolved in the longer term, and why I think profitability will come back into good amounts. They also did invest a lot into the company as well. So I know the company, when it comes down to the bottom line, said it was actually made a slight loss this year, and the people saying, oh look, Boohoo is absolutely terrible now because it's actually an unprofitable company. That's not actually correct. If you look into the company's financials, you can see here they're actually still producing good amounts of cash. It's just they're investing quite heavily into the business in the last year as well, with brands that they've acquired and setting up new infrastructure inside the business. So you've got to take that into consideration. You'll see a lot of shorts pushing out at the moment that you've got to be really careful. You've got to really dig into them financials and realise what's going on. If you look on an adjusted basis, the company actually did quite well, and at the moment on an adjusted basis, this company still trades down at 16 times earnings, which once again, like I said when I was talking earlier about how much of this negativity priced into Boohoo, this is it. It's trading down on an adjusted basis 16 times earnings. So yeah, it's a lot of this. The revenue growth and the profit side of it is all priced in. At the moment, Boohoo is priced that it's never going to go back to doing good rates of revenue and good amounts of profitability, which is really important to remember. And on the cash side of it, there was a big reduction in cash, which was now down at 1.3 million. The reason why is because they spent a lot of cash on the acquisitions over the last few months, and also buying into the infrastructure improvements as well. So that was, I would say that's probably a little bit of a negative, that I have burnt through so much cash, but at the same time, when you have had a history of producing so much profit that you have a big cash balance, it does make sense to invest in the company and kind of keep the company doing well and reinvest into it. I was a little bit like, going down to 1.3 million in cash is quite low. However, at least they're using it to reinvest into the business, and we'll talk about that in a little bit in a few seconds, because I have got a bit of a negative on it. Now, going on to the outlook, I think the outlook was probably the worst part of these earnings, because what was the key thing for me is looking at this company and going, is this horrible period coming towards an end? Because I thought when we get to the back end of the year coming up, we'll see Boohoo move out of this situation where it's struggling for growth. Shipping kind of calms down, profitability comes back, but the numbers that Boohoo gave suggested they see something different. They see 12 months more of pain. So the revenue was low single digits, which is not great, because I wanted them to be a little bit higher than that going forward. So that was obviously a bit of an issue. Also, the EBITDA was to be in the range of 4% to 7%. and at the moment on the last year they did 6.3%. So that suggests that potentially they could see this actually getting slightly worse. At the same time, they'd offer a little bit of an upside, but more than likely they gave a bit of room for that it could get worse, which wasn't great. So that was probably the weakest point with the earnings update, is that I knew there was going to be still, you guys know, you've seen it through a lot of the US companies that are currently reporting the first quarter right now and giving a lot of the guidance. A lot of them are saying, a lot of these issues are still continuing on at the moment. So we knew it was going to be a bit of an issue. My hope was that we were going to see this resolve in the next coming 6 months. It looks like it could still be another 12 months before we see this issue resolved. So that was probably the most negative point from my point of view from these earnings. I've got to say, on the debt point of view, they did burn a lot of cash off here. So they did increase the capacity to take on some debt and for that cash, which I was like, oh, yeah, fair enough, and have that in place. My little issue with that is that what management want to be doing is you always want to be raising cash in times where cash is easy to raise, not when you need to raise cash. So the time to raise cash would have been probably 12 months ago, and when Boohoo was at £4 a share, that would have been the best time to be raising cash and putting it on the balance sheet. Not right now, when we are entering a bit of a downturn and obviously the share price is not as high and the financials are a bit compressed at the moment. That's my little concern to management team, is that they should have managed that situation better. And obviously a year ago they had a lot of cash on there, so they've obviously chose to make a lot of acquisitions through like the Debenhams and everything like that, which is absolutely fine. But at the same time, if you were going to start improving the business and the distribution side of it, them decisions should have been made at that period of time, and then factor that in with, okay, we can make this acquisition or we can carry on improving our brands that we have here. We need to weigh it up and make sure that we keep a healthy cash position going forward. So my little concern on these earnings was that sort of decisions to increase that debt and burn through that cash. So that was probably one of the negatives that I did have. And in the whole earnings report, as far as I am aware, and I don't think I've missed anything, and I don't know if it came up on the webcast. Like I said, I've not been able to listen to it. The kind of acquisitions that they did make, we didn't get any numbers from them, which was, they never break out the numbers individually, but I would like to know exactly how a lot of these acquisitions are doing. The Debenhams side of it, the relaunch of Debenhams, get some numbers from them, because at the moment it doesn't seem to be having too great of an impact on the financial side of it. So they've burnt a lot of cash on that, so I'd love to know a bit more detail on it, which I didn't get from Boohoo, which would have been great. But yeah, overall my kind of thoughts with Boohoo is that there wasn't really too much new information in this update really. The only little thing that I would have said is that what has changed from my point of view is that what I thought this business could potentially receive the turnaround in the next 6 months. Unfortunately, by the looks of it, that's probably going to be knocked back another 12 months while a lot of these issues kind of carry on. And these issues are obviously the shipping problems, higher rates of shipping, the time to get a lot of these products out are still affecting a lot of the sales in the Europe, US. So obviously, hopefully that resolves itself. Hopefully the distribution center helps as well. But obviously that's one of the big issues here, and that's not really looking like it's going to get resolved. Unfortunately, it's a bit out of Boohoo hands, but yeah, that's obviously an issue. Obviously, the other issue is the returns rate. That's obviously affecting margins massively at the moment. Looks like that's not anywhere to getting resolved at the moment, but potentially that normalises going forward. But at the moment, those problems still do exist with Boohoo, and they look like they're not going to get resolved at the moment. So it looks like Boohoo as a share price will still be down here for probably at least another 6 months. They did give some suggestion that the hope towards the back end of the year they do see some sort of improvement, but not at the rate that I was hoping for. So that's probably the key thing to look at. So like I said, I don't think we'll see much of an improvement in the next 6 months. On the number side of it, we won't see much improvement on the share price side of it. But what I will say is that, like I said, the Boohoo brought these numbers out here, and you can see that right now Boohoo is basically got a lot of this priced in now. Boohoo is priced that it's always going to be a low single digit growth. It's going to be priced in that the profit does stay down here. And like I said, my big football theory here is that it is going to go back to growing at good 20% rates of revenue. I believe, in my opinion, the profitability will return as shipping issues stop and Boohoo either increase their prices or the shipping comes down, and the time that it takes comes down, I think that will resolve itself in the longer term, as well as, you know, so many other businesses that are having it right now. And once again, I think the return rates as well will normalise a bit as well, which is affecting margins, and a few of these investments will pay off. So for me, when I look at my bull thesis in Boohoo, it's not really changed, because when I look at it now, it's pretty much the same. I think that a lot of this negative is priced in, and for me, I still believe Boohoo will turn it around in the next 12 months, and like I said, it's all priced in here. So when Boohoo does go back to good amounts of growth and that profitability starts ramping back up in the right direction, I think that because of all this negative priced in, I still think I'll get quite a good return off Boohoo in the coming few years. So for me, not much has changed really, because my bull thesis still exists with this company. The only thing that's kind of changed is that I was hoping in the next 6 months we see that kind of rotation happen. Although I think after this, it looks like it could be another 12 months. So yeah, that kind of gives me a bit more time to buy a few more shares in Boohoo. I'm not going to rush into buying this dip at the moment. I'm just going to be nibbling away at it. And I think because of the numbers that Boohoo have brought out, I think that this will be down here for a little bit longer than potentially some other companies. So I probably will prioritise some other companies right now than buying this dip on Boohoo. But I'm still bullish. I probably will still buy the dip at a couple of points. And like I said, that's basically an update on what I got with these earnings. It was just, I would say, okay overall. So yeah, not much update really to say, apart from the problems they have are kind of continuing at the moment. So yeah, hope you enjoyed it. For you guys who wanted a Boohoo update, hit the like button, and I'll catch you in a bit.